This video is for educational purposes only and is not financial advice. Hi, I'm John from Nordic Value Investor, where we focus on long-term value investing and company analysis.
This is part 3 in a 3-part value investing analysis of Novo Nordisk, and in this video we calculate Novo Nordisk's intrinsic value using a discounted cash flow model. A discounted cash flow model estimates what a company is worth today based on the cash it will generate in the future. In practice, it does two things. One, it projects future free cash flows, and then it discounts those cash flows back to today using a discount rate to reflect risk and the time value of money. The idea is that the money you receive in the far future is worth less than money you receive today, so you discount it. When all the discounted cash flows are added together, plus a terminal value, you get the intrinsic value of the company. In one sentence, a discounted cash flow tells you what a company is worth today based on all the cash it is expected to produce in the future, adjusted for risk and time. To do a discounted cash flow calculation, firstly we need to find the free cash flow of the company. Free cash flow is calculated by taking operating cash flow minus capital expenditure. Going to QuickFS, we can see that the operating cash flow for 2024 was 120,968 million. And capital expenditure, which is the same as property, plant and equipment, was 47,164 million. That gives us a free cash flow of 73,804 million. That is our starting point. You might want to average free cash flow for the last 3 years, but as that number is in the same ballpark as last year's free cash flow, I'm just gonna use last year's free cash flow. Then we need to figure out how much we expect the company to grow over the next 10 years. Firstly, we're always gonna look at the growth rates over the last couple of years. We saw that EPS growth has been somewhere between 14 and 30% annually over the last 10 years. Book value growth has been somewhere between 15% and 36% annually over the last 10 years. Operating cash flow has grown between 30 and 11% annually. Free cash flow has gone from 15% annual growth over the last 3 years to decline in 11% from 2023 to 2024. Just looking at that number, that's not great, but as we have seen, this decrease in cash flow corresponds to Novo's growth in capital expenditure. A big pile of that growth is not due to maintenance capital expenditure, but growth capital expenditure. That's an important distinction. Novo Nordisk has invested a lot of money into growing the business due to market demand being higher than supply. But we do also need to realize that Novo Nordisk has met headwinds this year. This explains a stock price decline from around 1,000 kroner in June of 2024 to around 300 kroner as of when I'm doing this video, or from around $140 to around $50. That's a 70% decline. Their latest official growth guidance as of November for this year was a sales growth at 8 to 11% and an operating profit growth at 4 to 7%. Compare that to the start of the year, their expected sales growth was between 19 and 27%, while their expected operating profit growth was at 22 to 30%. Lastly, you want to be looking on different sites at what analysts are expecting from Novo Nordisk in the future. If the analysts expect a lower growth than you do, especially if you are new to this, then go with the analyst's expectation just to be conservative. Different analysts have different views, but based on publicly available estimates and my own assumptions, I'm gonna use a 7% growth rate over the next 10 years. So our starting point of free cash flow 2024 again is 73,804 million. Then we are going to apply our 7% growth rate. We'll take our free cash flows, multiply them by 1.07 and do that 10 years out into the future. That gives us 145,184 million of free cash flow in 2034. Next, we need to set a terminal value. Terminal value is part of the discounted cash flow model that estimates what the company is worth after our 10-year period. And to do that, we are using a price to free cash flow multiple. We assume that at the end of the 10-year period, the company could be valued by the market at a certain price to free cash flow multiple. And you use that multiple to estimate its value. It's very simple to calculate. You take market cap and divide it by free cash flow, or you can do it on a per share basis, where you take stock price divided by free cash flow per share. At the end of 2024, Novo's stock price was $83.71, and their free cash flow per share was $2.40. 83.71 divided by 2.4 gives us 34.91. That means that $1 free cash flow costed $34.91 on December 2024. The price to free cash flow multiple can fluctuate a lot. The last 5 years, it has been between circa 20 up to 60 at its highest and down to circa 20 right now. We could average the last 5 years out, but because we want to use a number between 10 and 15 for a terminal value, we'll just use 15 for Novo Nordisk. The reason for not wanting to go above 15 is because we are thinking 10 years into the future. Companies, even high-growing companies, will usually enter a more mature state with lower growth in 10 years' time. Therefore, we expect our price to free cash flow multiple to fall over the next couple of years. So back in our discounted cash flow model, we'll take the free cash flow of 2034, multiply it by 15, and that's how we get our terminal value of $2,177,755,000,000. Next, we are also going to need a discount rate. A discount rate accounts for the fact that money today is worth more to us than money in the future. $100 today is worth more to us than $100 in 1 year or in 10 years. The discount rate answers how much less is money in the future worth compared to today. It's the same as asking yourself, if I invest in this company, what annual return do I demand to compensate for risk? And to compensate for the risk I'm taking, I always want at least 10% annual return. So we take our future cash flows and divide them by 1.1, which represents our 10% discount rate, raised to the power of the number of years in the future. The first year, we'll divide our free cash flow by 1.1 to the power of 1. The next year, we divide it by 1.1 to the power of 2, etc. Having done that, we get these numbers, which tell us the present value of our future cash flows. And we also want to do the same with our terminal value. Then we'll add all these cash flows together, plus the terminal value, to get a present value of $1,475,000,000. But to get the intrinsic value, we also need to add any cash or subtract any debt. To spare time, we are just gonna go to Novo's balance sheet on Seeking Alpha, and down in supplemental items, Seeking Alpha has calculated net debt for us. We can see that Novo Nordisk has $76,479,000,000 in net debt. And after subtracting net debt from present value, we land at an intrinsic value of $1,399,056,000,000. Lastly, we need to use Novo's shares outstanding to calculate intrinsic value per share. Going to QuickFS again, down in the income statement, down at the bottom, we can see that Novo Nordisk has 4,463,000,000 of diluted shares outstanding. So taking our intrinsic value, dividing it by shares outstanding, we get our intrinsic value per share of 313 Danish kroner. Knowing our intrinsic value per share and our current stock price, we can calculate the margin of safety. Our margin of safety tells us in percentages how much a stock is overvalued or undervalued. So in following this formula for us, we find that Novo Nordisk is undervalued at 2%. This tells us that Novo Nordisk stock is selling at around fair value right now. Every investor must make his own mind up how much of a margin of safety he demands when buying a stock. A seasoned investor might buy a stock at fair value, while a beginner investor might want a bigger margin of safety to compensate for the risk he's taken. If you want a 10% margin of safety, that's a stock price of 282 kroner. A 20% margin of safety is 250 kroner. A 30% is 219, etc. If you're buying in dollars, here you can see the margin of safety in dollars. So to conclude this video, should you buy Novo Nordisk stock right now that it is selling at around fair value? There are a couple of questions that I would need answering. Firstly, let's talk about Novo Nordisk's moat. Novo pioneered semaglutide drugs with Ozempic, Wegovy and Rybelsus. They were the first ones on the market with these kinds of weight loss drugs and were scientific leaders in this area. And they have decades of GLP-1 production know-how. But they have been challenged this year first and foremost by their biggest competitor Eli Lilly. Eli Lilly's GLP-1 products have been very successful, with some of them showing higher efficacy on weight loss than Ozempic. This is a worrying sign and shows that Novo Nordisk's moat is challenged, and when two firms dominate a fast-growing duopoly, markets worry one's edge may narrow. And the recent pullback in Novo's share price reflects that investors worry that they might lose their dominance in this market. This doesn't mean that Novo Nordisk will lose this dominance, and this doesn't mean that Novo Nordisk suddenly is a bad company. This might just be a hiccup, and they might bounce back with their next generation drugs that are in late stage trials as we speak. A third and possible option is that both companies will share the GLP-1 market in a very profitable duopoly rather than one losing it outright. So is this stock price an opportunity to buy Novo Nordisk stock at fair value? Or is it a sign that Novo Nordisk is on the decline? That's a question you must answer. To invest in a company, you must be confident that the company will be successful in the next 10 to 20 years. If you are confident that Novo Nordisk will bounce back stronger, then this could be an opportunity for some investors to buy in. But again, you have to be able to predict with good confidence where the company will be in 10 years' time. If you can't do that, then investing in this company may not be right for you. As always, this reflects my own analysis and is not financial advice. You should always do your own research before making any investment decisions. So that's it for this video. Our next step, if you are considering investing in Novo Nordisk, is to look at the quarterly statements. I would also want to analyze and compare the financial statements of a key competitor, in this case Eli Lilly, and that's what I might do in my next video. We'll also be on the lookout for Novo Nordisk's annual report, which is usually released in early February. This is my first ever YouTube video. If you like this kind of content where I'm analyzing companies and their financials and you want to help me along, I hope you would like this video and that you would consider subscribing to my channel.